All right, my friends, so here's the show. Today we're going to talk about moonshot discipline, how to bet bold without breaking the empire. A lot of us have been asking for this, and frankly, it's one of the more difficult episodes to prepare because there's no right answer. So what we do today is try to give you a framework to think about moonshots in the context of your overall portfolio. How much to allocate, what types of plays to look at, and how to think about rebalancing. And of course, I'm going to share some of my favorite moonshot plays along the way. But remember, what works for me might not work for you. So this is a little bit more free-form today. And we want to hear from you in the comments about how you think about moonshots and asymmetric investing. All right, let's get into it. Hey, real quick, if you're new to the channel, welcome here. We talk about all things business, investing, and entrepreneurship. Hit subscribe so you don't miss out on any future episodes. We'd love to have you join the community. All right, so first off, the disclaimer. Just like with any episode where we're talking about specific names or sectors, the ideas that we're sharing today are not necessarily suitable for everybody. What might be a great moonshot play for somebody like me may not make sense for somebody else. Your situation is going to depend on your time horizon, your risk tolerance, your liquidity needs, your tax situation, your emotional attachment to certain stocks, and really an infinite number of other factors. So please run everything by your licensed professional before making any moves. Now that we got that out of the way, let's dive in. So when thinking about moonshots, there are two aspects to consider. First is how much you should allocate to these plays, and second is which plays you should choose. Let's start with how much. When it comes to moonshots, we always want to balance conviction with control. That means that we want to maintain enough of a position size so that we can sleep at night, but also enough flexibility so that we can react to changing circumstances and opportunities. The idea is to be able to withstand the inevitable volatility that comes with moonshot plays, while still being able to capitalize on big moves when they happen. So I personally use the 5th of February 10 rule as a guideline for my moonshot allocations. 2% goes to mega moonshots, 5% goes to moonshots, and 10% goes to what I call sprinkle stocks. Companies that have big upside potential, but they're a little bit lower conviction than the other plays. 5% is a pretty standard guideline for moonshots in general, but it could be higher or lower depending on your situation. For example, I allocate about 10% of my total portfolio to sprinkle stocks, but only 2% to mega moonshots. I do this because I am comfortable with a wider range of outcomes. When it comes to sprinkle stocks, because they generally have less upside than true moonshot candidates. On top of that, I have a higher time horizon than many investors, so I am willing to tolerate more volatility, knowing that I won't need to sell during a down period. Now, let's talk about which moonshot plays to target. Here I focus on three characteristics: optionality, leverage, and scarcity. Optionality refers to investments that have multiple paths to value creation. Think of it like this. If there's only one way for a stock to go up, then it's probably not a moonshot play. For example, Tesla stock might go up if the company produces more cars, but it's not going to go up that much if the company produces fewer cars. But take a look at Roku. Roku is a platform play. It has multiple ways to monetize its users and create value. So if the company doesn't perform well in one area, it can rely on others to drive growth. Leverage is another important characteristic of a moonshot play. This is basically where an investment can amplify returns, either through financial leverage or by exploiting market inefficiencies. For example, a company that uses debt to fund growth initiatives or a hedge fund that uses derivatives to enhance returns would both be considered leverage plays. But again, leverage can be risky, so it's important to use it wisely. Finally, I like to consider scarcity when looking for moonshot plays. Investments that are rare or hard to replicate tend to be good candidates because they offer something unique or valuable that can't be easily copied. For example, I might be interested in a small-cap stock that has a unique product offering or a niche market position. By focusing on optionality, leverage, and scarcity, you can find moonshot plays that have the potential to deliver outsized returns. All right, now let's get into some of my favorite moonshot plays, but keep in mind these are not recommendations. These are simply examples of stocks that I'm considering adding to my portfolio. Remember, do your own due diligence and consult with your financial advisor before making any investment decisions. All right, so first up, let's talk about Shopify. I've been tracking this company for a while now, and I am really impressed with what they've been able to accomplish over the past few years. They've become the leading e-commerce platform for small to medium-sized businesses. And recently, they acquired a company called Deliver, which is going to help them compete more effectively with Amazon. The acquisition is expected to close in the first quarter of next year, and I am excited to see how it pans out. This is an example of a moonshot play with optionality, leverage, and scarcity, so it's a good fit for our framework. Next up, let's talk about Zoom video communications. If you haven't heard of Zoom, it is a cloud-based video communications platform that allows people to connect with each other through video conferencing, chat, and other collaboration tools. They've been growing like crazy over the past few years, especially since the pandemic hit and remote work became more common. And if you zoom out long term, you can see that the stock has had an incredible run-up. But if you zoom in closer, you can see that the stock is down more than 60% from its peak. I think Zoom is a good example of a moonshot play with optionality because they have multiple products and services that they can monetize. And I think they have a good shot at becoming the dominant player in the video communications space. Next up, let's talk about Spotify. I'm sure you've heard of Spotify, but what you might not know is that they're actually a moonshot play with huge upside potential. In addition to their core music streaming business, they're expanding into new areas like podcasting and audiobooks. They've made some big acquisitions lately like Parcast and Gimlet Media, and they're starting to pay off. Spotify has a huge audience and a massive amount of data on user listening habits. This gives them a huge advantage when it comes to developing new features and improving the user experience. And they're leveraging this data to personalize recommendations and develop new ways to discover music. On top of all that, they have a strong balance sheet and a ton of cash on hand, which gives them the financial flexibility to pursue new opportunities and make strategic acquisitions. So, if you're looking for a moonshot play with optionality and leverage, then Spotify might be worth a look. All right, so those are some of my favorite moonshot plays. But again, I want to remind you that these are not recommendations, and you should always do your own due diligence. And of course, we can't talk about moonshot plays without talking about rebalancing. Rebalancing is an important part of any investment strategy, but it's especially important for moonshot plays. When you allocate to moonshot plays, you're taking on more risk, so you need to be prepared to handle the inevitable volatility. One way to think about rebalancing moonshot plays is to set a target allocation and then rebalance whenever you go above or below that target. For example, if you want to have 5% of your portfolio allocated to moonshot plays, you might rebalance monthly or quarterly to keep your allocation in check. However, I personally prefer to use a dynamic rebalancing approach. Dynamic rebalancing means that you adjust your asset allocation based on changing market conditions and investment goals. For example, if I'm feeling more risk-averse, I might reduce my moonshot allocation to 3% or 4%. But if I'm feeling more adventurous, I might increase it to 7% or 8%. The key is to find an approach that works for you and your investment strategy. There's no right answer here. If you're looking to add more moonshot plays to your portfolio, but you're not sure where to start, consider signing up for our free newsletter. Every week, we highlight several under-the-radar stocks that might be worth taking a closer look at. Plus, you'll get access to our full stock list, which includes all of our favorite dividend, growth, and moonshot plays. Now, remember, investing in moonshot plays is a high-risk, high-reward proposition. You could lose a lot of money if you're not careful. But if you follow the guidelines we've outlined today, you can increase your chances of success and potentially generate outsized returns. So what do you think? What are your favorite moonshot plays? Let us know in the comments below. And if you enjoyed this episode, please make sure to like and subscribe. Thanks for watching,